at the bottom end of the pack. Mridula Jalan of Senora Advisors joins us right now on the show with his thoughts on the fundamentals. Mridula, good having you. Thanks for joining in. What has your stance been on cement, and were you guys buyers in the recent weakness that we saw in 2019, and what's your belief now?
So we were buyers in Shree Cement and Ultratech. We didn't really look at other names. Was just following the discussion you guys were having. What we are seeing in cement, especially the south names, where India Cement is catching up, is predominantly driven by the price hike we saw in the south, especially in Andhra. Now, that's one state which kind of leads the south in per se. And if you look at per se, the south heavy players, they are the ones who have outperformed, especially those in the futures and with a higher beta. The reason is the way the Nifty has outperformed has got a lot of people on the back foot. The one way to play that, to participate, is through mid caps and small caps and higher beta name. And India Cements is massively under-owned. There could be some short covering because of the futures, and which is why you're seeing this kind of participation. My sense is, in terms of structural earnings, we'd be more bullish on Ultratech and Shree Cement, and obviously ACC Ambuja is something which one looks at. So we stick to large caps, and yes, we were buyers in some cement names.
Still holding on to Shree and Ultra?
Yes.
Okay. That's the call on the cement space. And besides that, just want to highlight even stocks like Britannia now, one of the top gainers in Nifty, is up about 2%. ITC, Nestle, all of them have started to inch higher. So Nifty FMCG index is one of your top sectoral gainers right now. And besides that, metals is something which has been gaining traction right since the last 2 or 3 months. Mridul, have you entered into any of these steel or non-ferrous space as well?
No, not on the investment
You don't
side.
see the cycle turning since the price hikes have been announced for the third
Yeah,
straight month?
we are bullish on the metal space, but we typically don't invest in metals because they are cyclicals in the nature. And as we spoke to when we came last time, that we are very bullish on the global risk on part. Metals is one of the proxies to play that. What is tough to garner there is which companies will benefit from what regulation. We saw what happened on the Odisha side. We saw what happened with NMDC a couple of days back, right? We saw what happened with JSPL on their oil, iron ore reserves. So because of these regulatory things, we really don't look at that sector. But I can tell you what we really like in this sector is Tata Steel. If I have to buy one stock, it will be Tata Steel.
You wouldn't buy it, but if you were to buy, you'd buy Tata Steel.
Yes.
Why so?
Two things. One is the quality of the management, market leader. And the second is it's a more of a global, not only India play. And hence the regulatory risk for this name is slightly lower. And it's a backward integrated, which means the iron ore prices, which is going up globally, will not impact it. And the last part, which is the most important part, if you read the latest China news, where they have said the new green plants will not come up, which means the global steel prices will remain good. Tata Steel and Chorus will be big beneficiary of it.
Okay. Well, that's also a thought, and let's see. Tata Steel, if at all, Senora would go out and buy, they would buy into Tata Steel. There is some traction there of late. The last 2 or 3 sessions we are starting to see in the staples names. Now we spoke about Tata Global earlier, that's separate. But even the pure play staples, Britannia 2 or 3 days on a trot has done well. HUL was doing very well until trade yesterday as well. These are expensive names, we know, but would you continue owning them or maybe even put fresh money into them? FMCG strictly?
So within the FMCG, within the consumer names, we really like all these names. We track all these names. These are good stocks to own because in lead up to budget, what is happening, Neeraj, here is a lot of expectation is related to personal tax cut, something which media and around has been talking about for last 4 months.
The ministry also has.
Exactly, which is what I'm saying, which is what a buzz around has been. Now with that being the case, the first impact will come on these staples, which is why you're seeing this catch up ahead of the budget. The second part is these are the ones where the cash flows and the earnings are relatively stable. At these kind of index level, I want to balance it with beta and consistency both. What we recently added is Page Industries within this space, which has corrected some 40% from the top. There's been some stiff competition there. from whatever we could do our research and analysis, we really liked it from this perspective. It's not a short-term play for us. We do like Britannia. We do look at Britannia at around 2,800. It's still a good buy, but we don't hold it. That's the disclaimer.
Okay. Page Industries.
Between those 2 or 3 names which are in the mid-cap IT space which are in focus, Mindtree, Results Day, Tata Elxsi which came out with numbers, and NIT Tech which is trading at fresh highs. Any coverage?
We don't track them closely. We do monitor them. Now, what we believe out of these numbers is a lot of, like Tata Elxsi, we do track a bit. Is something where it's a mid-cap IT with a focus on the auto segment per se. If you look at it, last 5-6 months have been better for auto segment than what was feared. Part of that would have got reflected in terms of better revenue visibility for them. In terms of Mindtree has different segments than Tata Elxsi. The way it works with each of these mid-cap ITs, they focus on different segments. While they might move in tandem in terms of fundamentals, it is based on which segment is doing what.
Sure.
In terms of IT, we really don't invest in structurally in IT. But if I have to pick something for a trading at this point of time, I will agree with HCL Tech there. I think they have been giving good numbers for last 2 quarters, and the stock has been inching up slowly. If they deliver good organic growth this quarter, 625, 650 range could be possible for them.
Okay. Some uptick in Sterlite Tech ahead of its numbers. I think it's up 2% at 130. Let's wait and watch. The numbers are slated, I think, to come out tomorrow, if I'm not wrong. Could be mistaken, but do watch out for that one. Somebody's looking at the asset management space right now. You know that there's a multi-year growth trajectory, but the stocks have rallied quite a bit and therefore are expensive. What kind of time horizon do you need with an assumption that the earnings trajectory might be consistent for it to justify buying an HDFC AMC or an RNAM for that matter at the current valuations?
So 2 things are very important to understand. One is the quality of the earnings, not only the numbers, how the numbers are coming. If the numbers are coming on the basis of a consistent growth, broad-based growth, then a valuation of 40-50 times is also justified if the cash flows matches, which is what is happening with the kind of names which are trading at these valuations. What will happen is these guys will continue to trade at these premium valuations unless there is a change in the quality of the earnings. So the fundamental call we take is not only in terms of what the growth will be, how the growth will come.
How is the quality here?
So for me, the quality of HDFC, AMC or RNAM is quite steady in the nature because their clients are masses in number. And if you look at it, their earnings have not been linked to market conditions, which is even in the bad market, they have continued to grow and they have continued to earn well, which gives a stability to the earnings. The moment that happens, the multiple typically goes up. And which is why HDFC AMC will continue to trend. The other aspect which is very important to understand is these companies don't need to dilute.
Yeah.
Which means the holders which want to buy for 3 years, 5 years, they will have no option but to buy from market. To cut your answer in short, I'll have to at least look at 3 years earning and quality of it. I'm not saying anything, but if you look at HDFC Limited, while it's trading at near highs, it has not given a similar kind of a return as other quality market leaders have. The reason is very simple. HDFC Limited hasn't done well in their core earnings, which is what we try and differentiate when we look at a stock. Besides multiple, where the core earning is coming from. And the other thing which do to kind of insulate us from the volatility is we believe in deploying over a period of time.
Sure.
We don't buy everything up front. We recommend our clients to add slowly, to deploy the capital slowly so that you participate at every level.
Yeah, well, and that might be showing in the way some of these stocks could be doing as well. But take a moment to thank you, Mridula, for joining in today. Lovely having you and see you more often.
My pleasure. Thank you.